Make sure you guys check out my Patreon if you want all my real-time buy, sells, call-outs, morning update videos, plus more. Literally everything I'm doing in the markets, guys, is on Patreon. Join that. It's linked down below. Or you guys can go to stocksurfest.com/Patreon. And with that being said, let's dive into the video. So in this video, like you all saw in the title, we got to break down 3 must-buy value stocks to buy right now in the stock market. And as you all know, a lot of people, investors, traders, and not much so recently in the past couple of weeks, but earlier in 2022 and even before that, geez, guys, way before that for some stocks, but a lot of investors have been moving out of growth stocks and buying more value stocks, right? Companies that make money today where their earnings, their revenues aren't priced deep into the future. They're making a lot of money today. So we got to break down 3 of those in this video, which number 1, you guys can see here on the screen, it is Intel. And I've talked about this stock a lot on this channel because I'm an owner of Intel. Full disclosure, I own Intel and I've owned it for a couple of months at this point. I do not plan on selling it anytime soon, and I believe this is one of the deeper value stocks in the stock market right now. Point blank period. Deeper value stocks where they're making a lot of money today. They're doing well today as a business. You know, they're in the semiconductor business, and they pay a nice fat juicy dividend, and that dividend, to me at least, looks pretty safe. So as of now, Intel is roughly $196 billion market cap with a trailing 12-month PE ratio of just a little bit under 10. 9.9 is the PE right now, and they've made about $4.85 in the past 12 months in terms of EPS, so they're very profitable. That's fantastic. Again, guys, when we're in these time periods of rising rates, inflation, uncertainty, a lot of people put money in companies that make money today, that pay cash today in terms of a dividend, and that's exactly what Intel does. They pay about $1.46, well, I guess exactly $1.46 in dividends per year, which is right around a 3.08% dividend yield. And in the very short term, we got to be paying attention to the CEO of Intel and the CEO of Micron, for that matter, because they're testifying today in front of the U.S. Senate. The hearing is going to focus on the vulnerabilities in the semiconductor supply chains and the sector's connection with American competitiveness. So that might be moving the stock in either direction. This stock, along with Micron, which is MU, which we're not going to be talking about Micron in this video. So I really like Intel overall as a company that's kind of, I don't want to say they're completely forgotten, but when people think about semiconductors, they think, oh, NVIDIA. They think, oh, what's the other one? AMD. No one really thinks about, I mean, I guess people do think about Intel, but they're overlooked when it comes to the overall sector, in my opinion. And that's kind of what I like when I'm looking at an investment. I want to see a company that is well ran. There's still growth prospects in the future. They pay a nice dividend, and they're kind of under the radar. Those are some things that I like to look at. So Intel fits that. And when it comes to the technicals in the very short term here, Intel's breaking out. Let me zoom in and show you guys this. We have an inverse head and shoulders, right? Left shoulder here, head, right shoulder. We're breaking above both moving averages, as now the markets have in general the past couple of days been moving up, which is fantastic. So at this point, if Intel breaches above $50, even though I'm not looking at this as a technical play, I'm not trading it based on the technicals, but if we just look at the technicals in general, we can see if $50 breaks, which $50 has been resistance since the end of January, so close to 2 months now. If $50 breaks, there's a wide open gap to the mid 50s for the stock, high 50s even, which is where it's gotten many times over the past couple of months before the beginning of 2022. So Intel, I really like it. It's moving towards 50. If it breaks 50 on a technical basis, guys, this could end up ripping even further. And again, they pay a nice juicy dividend right now. The stock, in my opinion, is still at a very good price, which at the end of the day is why I own it and I feel comfortable holding on to it. So that's number 1, Intel. Number 2 is good old Disney, which I also own, ticker symbol DIS. And a lot of people might be looking at Disney like, Stas, Disney's not a value play, and I beg to differ. I think at these levels, this stock is very attractive, very attractive. And all you guys on my Patreon know I've been buying it left and right. I bought some more a couple of weeks ago. I just bought more earlier this week, and I plan on buying more at these levels as the stock is up, or down rather. I wish it was up. It's down. Well, I'm glad it's down because I'm buying more, right? That's always great. It's down about 28%, almost 30%, putting it well into a bear market from the $203 all-time high that was hit in the middle of March of last year. So this stock's been going down for a full-on year, guys, and you all know Disney stock. We don't have to talk about the brands that they own, the fundamentals. I mean, you guys know this company, right? They got the parks, they got the cruise lines, they got some of the best movies out there, the best brands in general. I mean, they got Disney Plus, they got Hulu, they got ESPN. I mean, the list goes on and on and on. So this is a very deep business. It's very hard, dang near. Honestly, I would say I don't want to say it's impossible, but it's pretty dang close to impossible to disrupt Disney. Talk about an economic moat, right? I mean, right now they're at a $256 billion market cap, $1.68 of trailing 12 months EPS, and their EPS or PE ratio rather is very high right now because, as you guys know, they cut their dividend, their earnings got slaughtered throughout the pandemic, and they're still recovering. So their PE ratio, I don't want to say it's artificially pumped, but I'm not paying attention to it right now. And overall, I believe Disney will bounce back in a major way in the post-pandemic era. You know, people are going to be going to Disney. There's a lot of pent-up demand, and I've been seeing these parks freaking packed. I've had so many people that I know go to Disney, and I've seen in general just scouring the internet. Disney is pretty packed right now in general, even though the prices are going up because of inflation. And I've mentioned this before. I do believe Disney has the pricing power, as a lot of companies do, to raise their prices as they have done, and people are still going to be going to Disney, guys. They're still going to be going. Disney Plus is still growing, still getting subscriptions, and again, in a post-pandemic era, I don't see how this stock doesn't start breaking out again in the next 3 months, 6 months, 9, 12 months. I believe Disney will do well, and even in a couple of years from now, I'm not just looking at it as a short-term play. I'm in this for the long haul, and again, that's why I've been accumulating shares over the past couple of weeks, and earlier this week as well. As all you guys in my Patreon again know, you get all my real-time moves, buys, sells, all that good stuff, right? So Disney stock number 2, and eventually I think they will bring back that dividend, which is fantastic. As you guys know, they cut their dividend in order to invest that money into the streaming services and other services and products that they offer. As you guys know, a dividend, it doesn't just come out of nowhere. They're paying dividends out from their earnings, and if they don't pay dividends, that's extra cash they can use to grow the business internally, which clearly they get a better return on that money from investing it internally than giving it to us as shareholders. So that's Disney, DIS. The last one here is Ford, which, hear me out on this, guys. I don't think Ford is a screaming buy quite yet. I still think it might be a little bit lofty, but now that it's down 33% from the recent almost $26 high, it's getting interesting to me, guys. And recently it got down to about $15, which I don't think $15 is a buy quite yet either. But if it starts cracking under 15 into the 13, 14s, that's where I think it's a buy, me personally. And as always, I'm not a financial advisor, yada, yada, yada. You guys know the disclaimers, right? So at this point, out of all these, Ford, I do not own. Again, I own Intel and I own Disney. I do not own Ford yet, but this is one that in the next coming months here, let's say the markets get hit more, or even just Ford in general, maybe it starts coming down a bit more. I'm going to be adding it at $13, $14, hopefully even under that. 10, 11, 12 would be a steal in my opinion. So right now, Ford's market cap is $68.5 billion. The PE is just a little bit under 4, so it's pretty much at a bargain basement value when it comes to the price to earnings ratio. But still, PE is not the only thing, guys. I would want this stock, again, like I said, down to about $13, $14 before I start buying it, even though the PE is at a 4 right now, which means it could be undervalued. In terms of EPS in the past 12 months, they've done about $4.50 roughly, and they pay a pretty nice dividend. Right now, their dividend yield is 2.37%. They pay 40 cents a share per year when it comes to dividends. So if you own 100 shares, you're going to make $40 in a year from dividends. And obviously, you guys can do the math. 1,000 shares, 10,000 shares. If you have 10,000 shares, you're going to be making $4,000 a year in dividends. If you have 100,000 shares, we're talking about 40,000 shares or $40,000 a year in dividends, and so on and so forth, right? So at this point, Ford, it's almost in the sweet spot, not there yet. And when it gets there, I will strike, because I am one of those investors and traders that likes to keep some cash on hand. I'm not always all in the markets. I'm not always balls to the walls or pedal to the metal, whatever you want to call it. I like to have some cash, 10, 15, 20, 25%, depending on the time period. And it's going to be put to use, hopefully, in a Ford stock soon enough. And we'll see how it goes, guys. So overall, that's it. If you found value in this video, I'd really appreciate it if you hit the like button, subscribe, and if you want to join the Patreon, check that out. It's linked down below. You get all my buy, sells, call outs, morning update videos, more access to me throughout the day, plus more. Again, all that's on Patreon, link down below. And don't forget to get your free money from Moomoo. You get 1 free share of NEO guaranteed, and up to 5 other stocks, each of which could be valued up to $3,500. Just use my link down below, deposit at least $100, and boom, you get your free stocks. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, peace out.